Hi, good morning. Good morning, everybody. Welcome to the Future of Lending and Capital Markets breakout session. This was one that I really kind of wanted to be a part of because how important it is to an industry, and really the panel that we put together today is one that views the future of lending from different angles. And really the catalyst for this session was the perception that financial lenders and banks in particular are realigning themselves to compete in new arenas, organized around distinct and often specific customer needs. And even with real estate, we see lenders focusing on specific type of project, whether it's a transit-oriented community, a public-private partnership, workforce housing, or student housing. So we'll aim to discuss how lending and banking in all of its forms is changing and will continue to do so, given the perceived customization. Our panel today is composed of experts from different areas of our financial system as we try to provide a comprehensive view of the current financial world and the future one. So let's meet our panel. First, the gentleman to my left, to my right, Carlos Perez is the first Vice President and Commercial Relationship Manager for Amerant Bank. Welcome, Carlos.
Thank you, Gus.
Marisol Torres-Gomez is the Audit Partner and Assurance Services Advisor for Cherry Becker, and she's also a valued member of our LBA Executive Board.
Good morning, everyone. Very pleased to be here today with you.
Althea Perez is the Deputy District Director of the Small Business Administration, overseeing SBA's mission of serving the district's 24-county territory. And quick note on Althea, the typical response in this town when someone needs help with the SBA or the federal procurement is call Althea. And last, but certainly not least, with us today is David Eyzenberg, President of Eyzenberg Company, an investment bank headquartered in New York. He is also an adjunct professor teaching graduate real estate finance studies at NYU and the University of Miami. And by the way, you can scan the QR code on the screen and then touch the headshot to learn more about our panel. So let's get started.
With one correction, we are now headquartered out of Miami.
All right.
I left New York.
There you go. Well, welcome down to Miami. I'm sure your winter coat purchases have declined considerably.
Like my tax bill.
So a few months back, when we discussed having this session as part of the programming for the Expo, we did not see the banking crisis in the horizon. And given what's transpired in the last few months, I will ask each of you to add your quick 30-second take on the real estate banking crisis as a follow-up to the question I'm about to ask. So the opening question to all the panel, and Carlos, I'll begin with you, is how has lending changed since the pandemic? And do you agree that it will continue to be more specialized from the institutional end?
Thank you, Gus. Thank you, everyone, for being here and being part of this effort. I think is if there's one thing that is going to be ever changing going forward is understanding customer needs and knowing your customer as good as anyone. I mean, as best as possible. If we learned something from the pandemic is that we had to be connected, yet we had to be also distant from each other. So we kind of were forced by nature or by this event to embrace new technologies and be able to stay connected, work and be efficient, and also, in our case, in the financial sector, provide to our customers. So is an ever-moving target, is the change, those changes were accelerated, is that the technology was here, we were somehow not put to the task to embrace those technologies. Back to the question, is it an ever-changing target? Yes. Do we make a lot of strides in terms of embracing new technologies, being more efficient, understanding better our customers, and I guess we did a good job. You know, that's a good take of the pandemic. And in our view, I mean, I'm a community banker, so I was able to stay close, stay focused to our mission. So that's the main goal.
Thank you, Carlos. Marisol?
I have to agree totally with Carlos. And I'm going to start with the crisis of the banking, as a matter of fact, because my opinion, this crisis that we're going through with the banking is actually an aftermath of the pandemic, something that started in 2022, and we're still dealing with it today. And in agreement with what Carlos was saying, I think the best thing that did come out of this pandemic was us partnering with our clients and really understanding their needs, because they had to rethink, they had to refocus, they had to think out of the box to be able to reinvent themselves. And how are they going to do business that they were accustomed to doing prior to the pandemic and now after the pandemic. So that's something that's really important.
That's interesting, Marisol. Thank you. And Althea?
Thank you. I have a very interesting take, I think, on it all, since I'm from the Small Business Administration. And through the pandemic, we were the source of a lot of money for small businesses going through the crisis, whether it was the grant money we gave out, the COVID EIDL, the PPP. So it is very interesting to me kind of where we are right now. I agree with Carlos. For us in government, the pandemic was great in that we embraced technologies that were there and we just simply ignored. We, as a group of people in federal service, we do things very differently now. Of course, so many people still working from home, but that has been interesting. But for banking, in this market, which for us is everything south of Orlando, I feel that when I look at our portfolio, the lenders are killing it. And let me tell you why. Like I always say, I don't know how you make the sausage. All I know is it tastes good, okay? But for us, we, of course, have our loan guarantee program. Through COVID, in Florida, Florida received 10% of all pandemic relief money. And I mean, I don't want to break my arm patting myself on the back, but our staff here really crushed it in making sure that small businesses knew what we were doing, how we were doing it, and helping them to access it. But at the same time, since fiscal year 2021, which for us started October 1st, 2020, till today, because I looked it up before I got here, lenders in this market have done over $5 billion in SBA guaranteed lending. Now, that sounds like a good number, but you don't have anything to compare it to. So let me help you. Our best year ever before the pandemic, we were doing about $1.4 billion in SBA guaranteed lending. So I tip my hat, applaud the lenders in this market like Amerant, who over that time period have not shrinked away from lending, but are advancing toward it. It is a testament to their fortitude and the fortitude of small businesses in this market. Active, dynamic small business owners who are really going at it for themselves and their customers. So I'm excited. I'm delighted to be here today to share that good news with you. I am not a doom and gloom kind of person. So for those of you who are here and listening to me, keep doing what you're doing. Press on. If there's anything we can do to help you, please let me know.
That's great news and great advice. Thank you. And Mr. Eyzenberg, David, if you can kind of not only offer your perspective, but I know that you probably have a pretty professorial view on the banking situation today.
What was the question?
Well,
I got it. All right. I am slightly doom and gloom, but not that much. So our business is national from a footprint standpoint. I'll give you some numbers also. Last year, we did about 400 million hours of capital placement up and down the stack. So we not only do senior lending, we do mezzanine, pref, and equity. About 50% of that business came from banks. This year, our pipeline is about $1 billion. I expect banks to maybe do only 20% of it. So, and that answer has changed literally based on the last 2 weeks of things happening. Whereas the banks were the dominant provider of construction financing today, many of them today will not be able to do it without a depository relationship that is heavier than it's ever been. So the alternative lending capital around the market, the debt funds, the mortgage REITs, the private lenders are the ones that are stepping in to fill this space. Banks have a phenomenal role to play, especially in support of small businesses. That will not change. Speaking purely from a commercial real estate standpoint, banks are going to play a smaller role while they figure out how to fix the problems that are on their balance sheets.
Thank you, David. And question for Carlos, kind of switching gears a little bit. To me, Amerant Bank is an example of a hometown bank that seems to focus on a lot of corporate and business lending as well. I know you do some real estate, but you know, and you've had a great last quarter. The bank is doing well. Is it correct to view Amerant Bank as more of a business bank, lending to business and helping corporate clients fund their operations?
Yeah, absolutely. The way we're striving to reach our goals are like bringing more CNI business. We have, I would say, some sort of expertise. Been doing it for a while. Myself, I've been at the bank for 11 years. The bank has been around for 40 years. And our focus is being the CNI portion of the market. When we talk to our customers, the first thing they say is, I'm impressed how you come in here into my business and you want to understand how I operate. So yeah, that's a true testament to what I've been doing. What we've been doing as a team is just bringing more CNI and diversifying our customer base. One point, we would not be able to do this and achieve this goal without the SBA. Big kudos to the SBA. And if there's any doubt that private and public partnership, it's a real possibility in the business sector, that we could be a great example, I would say.
And thank you for the tee-up question, because that's where I was going. So, Althea, I know that you work very closely with banks such as Amerant, and I guess I'm curious as what you're hearing from your small business owners, and how is the SBA addressing some of the newer concerns that they have?
Well, to be honest with you, our small businesses are saying what they always say. Nobody's lending, but I just told you. There's over $5 billion in SBA guaranteed loans since October of 2020. So they are lending, okay? So what I know from the pandemic, though, even though I told you 10% of all pandemic monies went to Florida firms, we know a whole bunch of them never got access to some of the easiest money to get into a business. Our COVID EIDL loan, 30 years, less than 3%.
No brainer.
PPP, totally forgivable. All you had to have was payroll. A lot of folks don't have payroll. A lot of people don't have records. So I think in terms of what can make the difference, what we're trying to do this year is focus on financial literacy for small businesses, because if they don't have their taxes in place, they're not going to get any action. If they don't know how much they can borrow, they're not going to seem credible when they get to the lender. So we have our resource partners in the marketplace to help small business owners with that. They're right down here. The Small Business Development Center at FIU is the #1 SBDC in the nation this year. Woohoo! Jesus! Thank you. But I would say this to the point that Carlos has been making, and if there are any other lenders in the audience, relationship building is going to be critical with small businesses. Don't be mad at them because they don't know what I just talked about. Send them to us. Send them to our resource partners. We'll clean them up for you. Send them back. They'll know what they need to know, have what they need to have, all of our services are no cost to them and a real game changer. So I'm hopeful that you all heard me what I said. We're at sba.gov/South Florida. We're happy to help your small business customers do that work that they need to do to be able to borrow, because we've already demonstrated that Amerant is in the marketplace to do the loans.
I'm gonna stick with the call Althea guidance that I offer. So, but that was a great transition to something that we talk about often. How, and I know that, originally I see you as an accountant, but you've migrated or morphed into more of a advisor for your clients. How do you work with your clients, or how early do you work with your clients, not only on identifying or getting their documentation in order for the lending, but also tax savings, right? Maybe they don't have to borrow as much as they think if they structure their financial data in a way that is beneficial come end of the year.
That's a great point. And to add to what Althea was saying was, all these small businesses and a lot of companies that we perform services for, they come to us for compliance tax work, right? They want to have their tax, that's a required filing that has to be, but what we try to do is we try to get them to be very proactive as well as us being proactive. We're in communication, constant communication throughout the year with all of our companies that we perform services for, understanding, something that Carlos was saying earlier, understanding their business, understanding their operations, understanding their processes to be able to help them come up with tax strategies, how to save money, how to be able to get more money in their pockets and not having to go and ask for so much more lending, which a lot of tax saving opportunities, that same as SBA with all the different grants and loans that are out there, there's so many tax saving opportunities that are available to companies that companies are not aware of. And if you don't have a reputable firm that's looking at your operations and looking at your numbers, you may not be very privy to that, and you may not be aware of how much money we can be saving you.
Yeah, that's interesting. And I want to kind of, when we started to develop these questions, David, this was the first question I put on, and I've been trying to fit it in somewhere in the script. So before I ask you my future of lending question, I did want to ask your scholarly take on the Fed's action, and perhaps, Althea, you can kind of chime in after. The rate of inflation is at 6%, down from 8%, still not where it needs to be, but the argument can be made that over the last 12 months, it's curbed somewhat. The Fed just recently increased rates once again. In your opinion, is the Fed being too aggressive with their monetary restrictions by continuing to raise rates? Loaded question?
It is a loaded question.
You're on camera, so.
It's a good thing that I work at a small business and can't be fired.
And if you're in trouble, just call Althea.
That's true. So let me ask this. By show of hands, so I'm a small business owner. I'm going to join you. Who feels good about the prospects of their business today for the next year? Raise your hand. Okay. Raise your hand if you think rates are going down. Okay, so only the people that felt really good about their business thought their rates are going to go down. So if you think rates are going to go up, which is pretty much all of us in this room, right? And you're not feeling super confident about your business, how much money are you going to go out and spend on improvements to your business? How much hiring are you going to do? How much capital improvements are you going to do? How much development are you going to do? Not that much, right? And so all the activity that the Fed is trying to stifle by raising rates is kind of beginning to work. It just takes time because you had the boost from the pandemic nonsense. So the question isn't, is the Fed being overly aggressive or under-aggressive? The real key point is, what's the Fed going to do, right? The Fed's number one goal is not to have low unemployment. The Fed's long-term goal is not to have a balanced trade. It is purely to fight inflation, and inflation is very insidious. For anybody that's lived through the 70s in the US, it sucked, right? I only came to this country in 1980, so I only heard about it. We are in a stagflationary environment and raising rates does not fight a stagflationary environment. Now, what might have happened in the last couple of weeks is this banking debacle, in spite of the $5 billion, right? It is a drop in the bucket from the amount of money that banks generally lend. That is going to go down, so the amount of money and liquidity going into the economy will go down, and hopefully it will not have the same job destruction that a rising interest rate environment from the Fed has. But at the bottom rate is very simple. Your rates are going up. So it almost doesn't matter whether we think the Fed is right or wrong. The Fed's going to do stuff, and the Fed's information is always backward looking. So there's always a year or 2 year lag sometimes between the effects of what the Fed action does and what actually eventually trickles into the economy. So you can look at it as challenging times. I happen to think of it as opportunistic times. So there's always opportunities in a tough market. And for the well-capitalized banks out there, and Amerant being one of them, they're going to find their spots, and they're going to find really good lending opportunities as well.
Thank you. And Althea, if you can put on your old commerce hat or former commerce hat and kind of give your 2 cents.
Yeah, I mean, of course, I'm no economist, but what we believe at SBA is that, and I think if we notice what has happened with government since the pandemic, we expect interest in our programs, our lending programs, to increase. We expect banks to continue coming to us for that guarantee to mitigate against the risk that's associated with lending in hard times or anticipated hard times. So we're here, we're open for business, and we expect to see an upturn and hope that business owners will be optimistic at least about being able to borrow with our guarantee in place. And David's right, our lending in terms of our guarantee only represents about 3% of the lending that happens, or the business activity that happens with financing businesses. So yeah, our $5 billion is a drop in the bucket. We're proud about it, don't get me wrong. So we expect that those things will continue, our programs will continue to be of interest to people.
That's very helpful. And returning to David, we spoke earlier about the personalization of financial vehicles. And Eyzenberg, to me, Eyzenberg and Company is a very good example of that. Your ground lease advisory services, for those of us that pay attention to partnerships between public government and private sector to build and develop workforce housing or related type units, a ground lease is a typical component in those type of projects. Can you talk about ground lease initiatives and as a financial product option, not only, I guess, for investors, but for landowners as well?
Sure. So a private owner of property has different motivations than, let's say, a governmental entity, right? For various things. However, at the end of the day, everybody wants to make money, right? Everybody needs it's either tax revenue or income. It almost doesn't matter. So ground lease is an interesting product. Ground leases have been around for, frankly, thousands of years, right? From the monarchs to the church and such. But in the U.S., it's been a evolving capital structure. And the best way that I can think about it is, if you happen to own land, right? You're an owner of property. You always have a couple of options what to do with that land. You can build a property on it, you can sell it, you can sit on it, or you can contribute it to somebody as a joint venture. And all of those have positives and negatives attached to it, whether it's control, whether it's market risk, whether it's a tax consequence. A new structure is simply to not sell or do any of these things. It's to remain the landlord and lease your property under a long-term, usually 99-year, what is called a ground lease. And the person that leases it owns, think of everything from the dirt up, and they will put a building on top of it for you. And so the economic effect to you as a landowner is very simple. If your land was worth X, once a ground lease is in place and a building is on it, your land is now worth 2X. So that's the math. And yes, it varies by markets and assets and such, but we've done some fairly sizable transactions up to $120 million, and we've done small deals at $10 million where landowners in different markets own land. I think in Florida right now, hopefully in May, we're going to close a 240-unit multifamily property in Bonita Springs, where the owner had the land. We brought in a developer. They're going to put up 240 units, and they're going to get the benefit of not only a income stream into perpetuity that their grandkids are going to love them for, but if they wanted to sell and monetize, trading a ground lease versus land is night and day. It's a fixed income versus a dead asset.
Very interesting. And kind of just coming back, we are in an expo that's trying to look at about the future of everything. And I wanted to ask Carlos, I'm always curious, innovation and technology apply to banking. Are you seeing, or what tools exist? I don't know if it's artificial intelligence, predictive tools, stuff that's customizing the way you as a banker look at to lend and provide additional customer service that's more specialized, if you will.
Yeah, Gus, thank you. Great question. I mean, again, technology is at the forefront of our lives, and if you don't get on that bandwagon of technology, you're gonna fall behind. Yeah, in our case, artificial intelligence. It's important for us to understand the behavior of the customers, how they're gonna be transacting now and into the future. If we learned something from the pandemic, going back to the last crisis, is that people embraced technology in ways that we hadn't seen before. I think there's a statistic. We had people using financial technology, so-called fintech. 58% were using it, and now in 2021, it went up all the way to 88%. It goes to as simple as paying your pool guy, paying your landscape. That's fintech, and that's being embraced by consumers, and it's put in the market by financial institutions. So yeah, no doubt about it. Using artificial intelligence, it's part of our daily activities these days in the market.
And I wanted to follow up with a quick question. How do you see banks and bank representatives, relationship managers, such as you, getting more involved in your customers' business? You mentioned earlier learning what your company does, learning what your client does. But I'm talking about even getting into the HR processes, providing additional services.
Yeah, good follow-up question. The same way Marisol is evolved into an advisory role, that's happening also in banking. I mean, the good bankers are no longer just transactional bankers, especially on the C&I spectrum. You got to be involved. You get involved with a customer, you get involved with your attorney, you get involved with your accountant. So you become also an advisor. It's not just an act of luck that people are turning more into an advisory fee service type of structures. That's where the interest is going.
And I guess, Marisol, I would extend that question to you as well. I know that you service the LBA and you kind of try to keep the trains running on time, but how much more involvement are you having with your clients these days?
Definitely a whole lot more of involvement. Like we've been all saying, is just we really need to know our clients. We want to be able to always be on the look for their best. We actually consider ourselves not just an advisor, but we partner with them. We want to be seen as their partner to be able to see what's your goal in the next year, in the next 2 years, 5 years. So like that, we're able to help them structure deals, joint ventures, projects for developers and construction companies. How can you do it? Something that David was saying earlier in reference to analyzing the land and what can you do. Our firm does feasibility studies. Feasibility studies you're able to go in there and actually look at the land. What is best? The location. What's best? What is built here to be able to get more bang for your buck, and only us, by being proactive with our clients and really having them in mind as to their future and their operations, that's how we're going to be able to get them to that next level.
Thank you. And before we kind of begin to wrap it up, I did have one question for David. circling back to real estate and the financial stack, and I'm asking for a friend here. So creating a workable financial stack for a real estate development, it's becoming an art form. It seems capital from different sources, traditional banks, government programs and subsidies, investment institutions are kind of sharing the burden of projects. Can you speak as to the complexity and creativity that is needed to fully fund a project in South Florida these days? Another loaded question.
Okay. So financial structuring is only necessary when you don't have enough money, right? And as
Hence the asking for a friend.
and hence many of our clients are long on ideas and always short on cash. So, you know, we've made our hay in the marketplace by really just structure. We once in a while we get the benefit of a private banking type client, you know, that has very heavy deposits, and they can go to the private banking groups of any number of banks and they could borrow 55, 60, 65%. Generally, that's not our client base is much more entrepreneurial, even though they do deals, you know, from 20 to 200 million. The capital stack has become more tranched because the senior lender, whether it's a bank or an insurance company, has gone down the stack for various reasons, and equity and the cash they bring into the deal is always on short. So you have this sort of part of the stack called the gap capital, the structured finance. So those vehicles are done with mezzanine financing or preferred equity or ground leases or C-PACE, which is an emerging product also. And on any number of deals that we're doing right now in Florida, the senior loan is rarely enough to make a deal happen, whether it's an acquisition or whether it's a development. It seems to constantly require some added portion. So for example, if you bought a traditional multifamily deal with a floating rate loan because you were going to increase the rents, do renovation, and make money, in the last 2 years, that loan, or the last, let's say 3 years when rates were like zero effectively, when that loan has come due, rates are not zero. They're like, you know, on a fixed rate maybe 5, 5.5, and a floating you're at 7 maybe. And your rent growth maybe hasn't topped out, but cap rates have gapped out because rates are higher. So that loan that you started at 70 or 65 or 80%, it's like 90, 95%. So even if you want to refinance, there needs to be a slug of preferred equity and mezz that comes in. So in every single deal, and it's not just, you know, South Florida, by the way, I love Florida. Every day I wake up, I am so happy to be here, you know, and, you know, you guys have a great governor also. I'm from New York, so you know what I'm talking about there. Florida has a lot of benefits that other parts of the market do not, right? The in-migration, the economic activity, fundamentally sound governance, that helps. But even here, you still need that added layers to make deals pencil out now.
Thank you, David. And I want to close out this panel with a question for all the panelists that really speaks as to the future. And I'd like to begin with Althea. Call Althea, you know. Can you offer your perspective as to how the banking system in all of its form and across the lending spectrum will look like 25 years from now and beyond?
Well, if I may, okay, I'm going to answer that quickly and then say what I want to say. I don't know. I'm not a futurist. But what Marisol and Carlos talked about really, for me just now, really hit the nail one more time about the tension between technology and the need that we have as human beings for connection and relationship. So 25, going forward, right, we have all this tech, we have social media. It's all designed to connect us more, but we are actually more isolated. So if you're gonna win going forward, there has to be, you, each person, you have to invest in the relationship. Because what I heard throughout this conversation is that Carlos wants a better relationship. He wants to be an advisor to your business. So does Marisol. So do I. I told you, connect with the SBDC. We must, if we're gonna make it, I believe, we have to invest in the relationships we have with one another. Even me at SBA, I'm the little engine in government. We're the redheaded stepchild of government. We were given that Herculean task of putting all that pandemic money out, but we didn't get any extra resources to go with it. We didn't get any extra people. So it's the relationships that I have with people like Mirna and the SBDC and the micro lenders and the lenders that help us really penetrate the market so that small businesses get access to those things and those resources and those relationships that are going to preserve them going 25 years in the future. That tension is so real to me suddenly because of your comments that we've got to focus on our relationships and not just go AI, because the AI is going to tell you, oh, Althea might be ready for X, but if I don't know you, I'm not doing it with you, right?
Absolutely. No, that's actually a great perspective. And Carlos, I wonder if you could kind of give us your take, maybe not 25 years from now, give it 10 years. How's banking going to look? How's Amerant Bank going to be 10 years from now?
Bigger and better, I tell you that. So yeah, it will continue to evolve, and the pillars of building relationships, understanding your customers and your stakeholders, meaning the employees, your vendors, everyone involved, your attorney, your accountant. Those relationships will get deeper and will allow you to win in the market. If I have something to say, when I started in banking, people will not refer to you as a partner. It was more of a transaction. And now, in the matter of the last 5 or 6 years, I'm seeing customers telling, you are my partner. I want to see you as my partner. And those are the customers that win in the long haul. And at the same time, if we don't partner among ourselves, going back to Althea's point, we're not going to get very far. So that's our stress.
That's good perspective as well. David, I wonder if you could add a little bit to that.
Sure. So there's been a long, steady state trend. There are big banks, the JP Wells, Bank of America, and then the second trend is they all suck at community banking. So yes, even 10, 25 years from now, you'll have consolidation. The big banks that have systemic, sort of risk opulence will continue to get big, but the need for the local banker to understand the business of the local person exists. And even if they grow bigger and get gobbled up by somebody else, there will always be a cycle where new, smaller banks are going to be necessary to service the needs of the communities. Because also, America's a lot of land, and you know what? It's not all urban, and the big banks just do not go into the rural markets or into the light suburban markets. That's really where the community banks and the credit unions make their hay. So banks aren't going anywhere. They're a fundamental fabric of the U.S. economy, and you can't get anywhere without them.
Marisol, as the executive board member of the LBA, I'd like to give you your last take on this.
Well, I wish I were able to predict the future. I would have picked the lottery numbers and, right? So, but what I could say is, like what we've all been saying is partnering with our clients, our prospects, knowing and understanding to be able to assist them to pivot as soon as something is. There's always going to be some type of economic uncertainties, and we just need to all be prepared and have our clients and our prospects prepared to be able to position them and actually be on the positive and take advantage of it, and rather not on the down.
That's a positive way to end. And so that concludes the future, maybe just the present of lending. Thank you to the panel. And please, at 12:30, we'll have Ask the Construction Lawyer session right here. So free legal services for at least half an hour. So please stick around. Thank you, panel. Thank you, everyone. Thank you all for
everyone.
attending.